Chainlink has been quietly weathering the recent market storm better than most major altcoins. While many projects have seen sharp breakdowns and confidence evaporate, Link has managed to stabilize after dipping to fresh local lows around $9.50 amid broader uncertainty. With Bitcoin dominance rising and liquidity thinning, most alts have struggled to find footing. Yet, beneath the surface, Chainlink's fundamentals are strengthening. Between Bitwise's spot ETF pulling in millions, protocol revenue surging fivefold, and reserves swelling rapidly, the Oracle giant may be coiling for a serious comeback if sentiment shifts. For newcomers, Chainlink, ticker Link, is the leading decentralized Oracle network connecting blockchains to real-world data, APIs, and off-chain computation. It acts as the bridge that makes smart contracts useful in practice. Without oracles, blockchains are isolated systems. Chainlink solves this using a distributed network of independent node operators to fetch, verify, and aggregate data securely. Founded in 2017 by Sergey Nazarov and Steve Ellis, it has become critical infrastructure for DeFi, insurance, gaming, and tokenized assets, forming a backbone layer for much of today's decentralized economy. The Link token sits at the center of the ecosystem. Node operators stake Link as collateral and earn rewards for delivering accurate data. Users pay fees in Link for Oracle services, while governance mechanisms allow token holders to participate in upgrades. There is no mining. Total supply is capped at 1 billion tokens, with roughly 626 million in circulation. At current prices, that places Chainlink's market cap in the upper $6 billion range, keeping it a top 20 asset and a long-standing institutional favorite among infrastructure-focused investors. Despite recent price weakness, on-chain signals remain strong. Lifetime transaction value enabled through Chainlink has reached approximately $27.75 trillion, nearly tripling in 2 years. Protocol revenue has surged past $5 million over the past 4 weeks alone, representing a five-fold increase compared to early 2025. That revenue feeds directly into ecosystem reserves and token burns, strengthening long-term sustainability and reducing long-run supply pressure. In January, Chainlink's reserve captured 99,000 Link in a single transaction, its largest acquisition to date. This pushed total holdings to roughly 1.77 million Link, a 377% year-over-year increase. Active addresses and Oracle job counts remain stable, while CCIP cross-chain volumes continue to rise. Whale accumulation has also picked up, with large holders defending the $10 to $11 support zone during recent pullbacks, suggesting strong conviction among long-term participants. Institutional interest is another major tailwind. Bitwise launched its spot Chainlink ETF, ticker CLNK, on New York Stock Exchange ARCA on January 14th, following Grayscale's GLNK product in December. The fund is physically backed by Link and Coinbase custody and carries a 0.34% management fee, waived for 3 months on the first $500 million in assets. Inflows have already surpassed $74 million, signaling growing institutional exposure without direct exchange buying. For traditional investors, this provides compliant access to Oracle infrastructure without custody risk, potentially unlocking significant sidelined capital. Beyond ETFs, development catalysts continue to stack up. In mid-January, Chainlink rolled out 24/7 U.S. equities price streams, delivering sub-second data across more than 40 chains. Over $80 trillion in traditional market data is now accessible on-chain, integrated into platforms like Lighter and BitMax. Partnerships in real-world asset tokenization, enterprise middleware, and global hackathons continue to drive adoption and developer engagement across multiple sectors. Analysts at major financial outlets have begun framing 2026 as a potential breakout year for Chainlink's tokenization and data infrastructure. Social discussion around Link has intensified, highlighting reserve growth, ETF inflows, and undervaluation metrics such as negative MVRV ratios near minus 9.5%, suggesting potential mean reversion if sentiment improves. Taken together, while price action remains subdued, Chainlink's network usage, institutional adoption, and revenue generation are accelerating. If broader sentiment turns positive, Link may be positioned not just for a bounce, but for a structurally driven revaluation, as one of crypto's most critical infrastructure plays. Real quick, if you're aiming to trade, check OKX through the link below. Right now, OKX is running a promo where new users can get up to €100 in bonus rewards just for signing up and trading. And if you refer friends, you can earn up to €200 per referral, which is honestly one of the better referral deals out there right now. I wouldn't mention it if it was trash. OKX has solid liquidity, good fees, and it's one of the platforms I've actually used without issues. If you want to check it out, the link's in the description. This utility surge has the community eyeing a rebound over pure speculation. Near term, over the next 3 to 6 months, if ETF inflows accelerate, maybe hitting hundreds of millions, and broader crypto sentiment improves with macro easing, Link could test higher ranges, breaking resistances around $12 to $13 for a push toward a 15 to 18. That's grounded in whale defense and oversold RSI signals hinting at relief rallies. If tokenization explodes, revenue keeps climbing and reserves tighten supply further, $20 to $30 by mid to late 2026 feels achievable. Some even float higher if Chainlink cements as the Oracle standard amid RWA booms. But perspective's key. Link's down 11.7% year-to-date despite the news, slipping below $12 supports on broader FUD. Token unlocks add daily pressure, and if inflows slow or OpenAI-style AI, narratives steal spotlight without ties. It could retest $9 or lower. Competition from other oracles or slower adoption in tokenized assets might fragment liquidity too. Watch for revenue dips, declining TVE or fading whale activity as warnings. Volume needs to hold elevated, and any Bitcoin dump could drag it hard. All told, Chainlink's not chasing memes. It's quietly becoming the plumbing for tokenized everything, with ETFs and revenue proving real demand. Fundamentals scream undervalued, and if 2026 delivers on the hype, patient holders could see solid rewards. Dig in yourself, play the volatility smart, and track those inflows plus RWA updates. They're the quiet game changers here. Check the link below for OKX bonuses. See you in the next one.